Started with $1 and a dream. This one for all the people that said I couldn't do it. You know the best feeling in the world?
Good day, everyone. This is Paul Shilajwa, the founder and CEO of Eagle FX. Welcome to your favorite channel. So today, guys, I'm going to share with you the NASDAQ strategy. Before I can say anything, please do the usual thing, just like the video, comment below, and also subscribe. If you are new, just subscribe and watch the previous videos. Also share with your friends and family, guys. Surely you do not want to eat alone. Surely you do not want to learn alone. Just share with your friends and family. Yeah, and don't forget to turn on your notifications so that whenever I post a video, you will get notified by YouTube. So guys, stay tuned, guys. We're about to start. So first things first, I would like to start with the basics. What is NASDAQ? So guys, what is NASDAQ? NASDAQ is an index, guys. NASDAQ is an index. It consists of about 100 companies out there. It consists of US companies. We're talking about also iPhone is there. We're talking about Tesla. We're talking about many companies that are under NASDAQ. So when you're talking about NASDAQ, we're talking about an index, a very volatile index. It's a very volatile index which many people love to play on it. Many people love it because they see that it makes a lot of money faster, but actually they're getting it into the wrong mentality, guys. And I know that you've fallen in love with NASDAQ. Okay, it's not a mistake, but you must know what you're definitely doing in NASDAQ. I will share a bit of psychology and all. Let me just give you a small over psychology into trading and all. Then, but I'll make a video separately talking about the psychology thing. First thing says, just take forex. Just take forex as a whole. The financial markets, the foreign market. Just take it as a business. Take it that you have started a new business. And for you to run a business, you must have capital. And for your business to always be open, your business to always be running, is for you to protect your capital. Is for you to take the right risk and to see if I could take this, is it gonna is my business going to be on a safe side, or is my business going to be on the risk side? So you have to take the right risks. So if you know that NASDAQ is not for you, NASDAQ is very volatile, you can't deal with such indices, do not be forced, because this is your money, this is your capital. Don't forget, this is your business that you started. There's someone out there also who sees NASDAQ as a big opportunity for his or her business. So let me not just go deeper into the psychology part, but all I'm just saying is that be careful. Get into something that you have made your research clearly about it, and you know what you are definitely doing. And one tip that I would love to share with all NASDAQ traders is that don't trade NASDAQ every day. NASDAQ will hurt you because and also don't forget, as I said, that NASDAQ consists of 100 companies. Don't forget that if it consists of 100 companies like iPhone and everything, so whenever they gain power, it means the market is always going up. So the market of NASDAQ is always going up. NASDAQ is always going on an uptrend. So for me personally, I always say the sells are temporary and the buys are the ones that are which are permanent. Not basically saying they're permanent, but they run. It has a lot of momentum in the buying side. But you have to just be careful and know what you are actually doing when you get yourself into NASDAQ, because you have to also know what you call the fundamentals of NASDAQ. You have to know the fundamentals also. You must include the fundamentals and also the technical part of it. So guys, we are about to get into the NASDAQ strategy. I'm not going to share everything about my strategy. I'm going to share one of the things in my NASDAQ course so that you may actually make money. But if you could take this lesson and you can take it serious and you can apply it properly, you will make a lot of money to an extent that you have money to pay for the course of Eagle FX. Then again, you have money to fund your account. You have more capital to fund your account. So guys, we are about to start. The name of the strategy that I'm sharing with you is called the lollipop strategy. It's called the lollipop strategy. Okay, surely many of you are thinking, what is the lollipop strategy? What is this guy saying? Because always when people say what was strategy, it must be something that we see on the market. Example, W formation, V formation, M formation. So guys, it's not all about that. I've named this one the lollipop strategy. Sorry about it. So guys, let's just go deeper into the strategy. We are on H1 time frame. Actually, I recommend this strategy to be used on only looking at H1, M15, M5 time frame only, because that's the smaller time frames, whereas you can see them visibly. So I see something, an example here. We're looking at NAS100, isn't it? Because it's the NASDAQ strategy. So guys, here we're going to use for the lollipop strategy. We're going to use this rectangle. Yeah, we're going to use this rectangle only. We're going to use this rectangle only. But I have to just let me first talk about the nature of the lollipop strategy. What the nature of the lollipop strategy? Okay, the information behind the lollipop strategy, the nature behind the lollipop strategy is that the market, the forex market as a whole, it has what you call an uptrend, a downtrend, and a ranging market, which you also call a consolidation. So don't forget, so now today we're going to focus on a ranging market. A ranging market is a market that is like this. Let me just do something very quickly. I wanna just show you an example of a ranging market or a consolidation market. How it looks like. Okay, guys. Here, what I've drawn here is what we call a consolidation. It's what we call a ranging market, a ranging market, a ranging market, because you can see it's playing on this level and also it's playing on this level. So the market is not going anywhere. It's actually playing in the same levels. It's playing in the same channel. We call this a channel. So this is a ranging market, or you can call it also a consolidation. So we're going to focus on this type of market today. We're not going to focus on an uptrend nor a downtrend, but this one. Okay, why am I saying this? This strategy is not confusing, guys. It will never confuse you. It will never confuse you at all. So, guys, let's say we're looking at this market like this. The market is ranging or it's consolidating, whichever you want to call it. Né? So, as the market is doing this, either way, the market is gonna break the channel. The channel must be broken. The channel must be broken. But one thing I have to tell you is that be careful of how the channel breaks And also be careful that you do not get kicked out. Be careful of the fake outs that the market makers gives you. Like this information here that I'm telling you is what I'm sharing in the VIP section. I'll go deeper into those things, but for now I'm just telling you them with only topics. So I'm gonna list them now. Be careful of fake outs. First things first, be careful of fake outs. Né? Be careful of the way the market breaks. Wait for a retest. Then that's all, guys. That's all to succeed in this strategy. So let's go into how the strategy works. How the strategy works is that, as you can see, this is the ranging market or a consolidation market, whatsoever you call it. So it has to break. It has no choice, but it has to break. Is it going to break upwards or downside? So let me find this. Okay. It's either the market is going to break upwards or it's going to break downwards. But whichever way, the market must come and retest this section and go up. Or it must come here, retest, then go down. So guys, what am I basically putting into action here? What I'm putting into action is that you will never fail in this strategy. You will never fail. But one thing I did not say is that one thing I'm saying is that this strategy is not 100%. But I can tell you that it is highly tested, and I can say you can be a profitable trader. Just have patience with it. Just have patience with the strategy. This strategy is called the lollipop strategy. So guys, we have the market that is actually consolidating or ranging. So on this market, we're just going to wait for our breakout. Neither the breakout will go up nor down. You do not enter the trade. You will enter your trade after what you call a retest. We're going to enter the market on the retest. The retest at this part is this part and this one. So even if the market goes up, just wait for a retest, then enter your trade on the retest. If it goes down, just wait for a retest and sell. Or here you buy. So guys, that's how the strategy works. Let's just take it into practical on the market as we are done with the nature of it. Okay, I think I see an opportunity here. I see an opportunity. Let's just first draw our thingy, our lower lows and higher highs, so that it may not confuse us. As you can see, the market here impulsively went into a channel, consolidated, a small consolidation, and went down. Then it started playing in this channel. It started playing in this channel, but the channel started here. The channel started here and broke out on this level. So after this breakout, I want to tell you something. There is two different entries that we have in the market. Two different entries. I go into deeper about the entry types on the VIP section, on the entry type. But we have two entry types. We have what we call a risk entry and also a reduced risk entry. So guys, this breakout. After this breakout, when you enter a trade here, when you trade, you take your first trade from here. Let me do this. When you take your trade from here and taking it to our higher high, our take profit must be on our higher high. It must be on our higher high. When you take it to our higher high, taking your trade there and risking at least 1.21%. We're taking this trade there. Okay, saying that we're taking the trade here. This is a risk entry, guys. This is a risk entry. Unless we have a trend line confirming for us that this is a reduced risk entry. So basically, you must mix this strategy also with trend lines. But if you do not want to use it with trend lines, you can use it the way it is. If maybe trend lines are confusing you, you can just use it the way it is. Because the way it is, it's going to be like this. What trend lines is going to be like this. The breakout of this part, as you can see, first touch, second touch, breakout is here, confirmation candle, just a bit of a rejection, then it took off. So if you could have taken your, if you were using also trend lines, you could have taken your trade from here and went up with it, looking at your first take profit being here. But if like it breaks out, your second take profit will be here. So it's eating bigger, actually going to eat a lot more pips, but it needs more knowledge. So after you join the VIP group, you will definitely understand what I was actually talking about. You actually know how to eat more big peeps. But for here, I'm just showing you that this is just a risk entry if you're not using trend lines. This is just a risk entry, guys. You're using a risk entry here and entering your trade. You ate a lot of pips. You ate a lot of pips from here till your higher high. It's a lot of pips. NASDAQ could have at least maybe given you about 1,500 or $100, but only if you're using those brokers with a candlestick extension like JP Markets and all. But if you're using broker that I'm using, Globex 360, it's a good broker which you know that even if you can sleep with your NASDAQ trade. On JP Markets, I'm telling you, you'll never sleep with your trade. And I'm not bad-mouthing it, but yeah, guys. So guys, yeah. If you enter a trade on the breakout, then you go with it. But let's say now we're looking at now that the market has came back to retest. The market has came back to retest. But here it is a tricky situation, guys. You must look very carefully. This is a tricky situation because it broke out and came back for a retest. You enter your buy and you're looking that your take profit will be here again, giving you a third touch. But unfortunately, it supports the last higher high. The last high of this part. Then it starts giving us another consolidation. Then it comes back again, hitting this line, giving this line a very, very important key point. Giving this line a very, very important key point, and again going up. So this level, if you can zoom in, this started from here. Giving us what you call a money pattern. I'll show you what this is a money pattern. Let me show you a money pattern. This is another strategy you must keep in head. So today I'm teaching you the money pattern and also the lollipop strategy. So it's two strategies. The money pattern is like this. Just want to show you the money pattern. The money pattern now. The money pattern really helped me a lot in my trading journey. It helped me a lot, and it is still helping me even now. The money pattern is very dangerous, very dangerous. It's just that people take it light, People take it light. Yeah, people take the money pattern light. This is the money pattern. Money pattern. It's a money pattern. Let me combine it very well for you so that you may see. But this is what I call the money pattern. In Eagle Forex, It's called the money pattern. In the money pattern, we're looking at that the market has came here, hit this line, and went up again. After going up, it came back and broke this line, then retested this line. After retesting this line, it gives this line a valid entry point of a sell. Then, but most of the time, it retests for the second time. Most of the time it does this. After coming here, it goes here again. It retests for the second time. Then we go down. Then it shoots down. It shoots down, 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 down. It shoots down. We enter our second entry. So your first entry will be on this retest, and your second entry will be on here, going down with it. It's the money pattern. It's the money pattern. Please, guys, write the notes. Please draw. Please take it to your whiteboards, guys. Yeah, this is a very, very important lesson that you must learn, that I'm sharing with you. I told you that I'm going to share more strategies. I'm going to share more things that I've seen in the market. All I need from you is to share this YouTube channel, so that whenever I see more subscribers, more followers, more likers, guys, I will share more knowledge. So we're looking at this place again as being our money pattern. It's not a proper one, but it is a very good one. It's a nice one, actually. It's not a very good one because as you can see here, the market broke and retested this place, and you enter a sell. So now the market is playing. So here, let's just take this one from here, because we entered our trade. So now we're looking at this one. This one now is giving us another channel. It's giving us another channel. You can see the opportunities that we're getting on the market with this strategy. So here is another channel, another consolidation. After this consolidation, the market broke. The market broke the consolidation, our first trade. Our first trade, risking about 1%. Yes, putting a very tight stop loss. A very tight stop loss. Then putting our take profit on the lower low, because we're looking at that by entering this trade, it will go to our lower low. It can give us a third touch. As this is the first touch, second touch, it can give us a third touch. And truly, it has hidden our take profit. It has hidden our take profit. Then we now wait and see what the market is giving us on this side. But as you can see, guys, the strategy is powerful. The strategy is powerful. I'm sharing very deep knowledge with you here. The strategy is very powerful. You can see the chart is very neat with it. The strategy is very powerful, guys. Consolidation, breakout, you enter your trade. Go to the lower low or the higher high as you take profit. Then the market plays consolidation, breakout, enter your trade, go to the lowest low that you see here, the previous low, I mean, and the previous high. So that's how it is, guys. That's how it is. I'm sure you can see now what the market is playing. So and I hope that you're going to use this strategy very well. You're going to use it. Let's just go at least to M15 and see. At least maybe I can get another analysis for you. Let me see this place. Okay, I see one. I think I see one. First, draw your support and resistances. I mean your lower low and your higher high, where the market has turned, your key levels. Then we go here. This is a perfect example of what I was speaking of the disadvantages that you might take the trade off. So guys, you must be careful with this strategy. Just be careful. Just be careful. Just be careful. You must know your patterns also. Just be careful. Just be careful with the strategy. It's very powerful. You must know that it's very powerful. This is a very clear example that I was looking for. Here it was an impulsive move. Here you can see it is a double top. Okay, the market came impulsively, the market corrected. As the market corrected, the market broke. Then you never knew. You took the trade only to find out that this is just a fake out. Only you knew that this is just a fake out. This is just a fake out. That the market makers were just playing around with you. The market makers played around with you. This is a fake out. It's not a trade you should have taken. Then you find that you enter your trade there and your stop loss is about here. The market goes back inside the correction and it is your stop loss. Then this is a breakout. After breakout, the market went up. It came and retested the area. It came and retested this area again, which is the trade that you must take. You take this trade, you go with it, buy. Then as you reach break even, you just put your stop loss on your entry point. Let's say when you reach here, you just put your stop loss here, then you just go with it. It comes back again. Your stop loss, don't forget, your stop loss is where? Your stop loss is at the entry point. Then the market again gives us a money pattern. Guys, this is a powerful strategy that I'm sharing with you. This is a powerful strategy I'm sharing with you. You must listen attentively, and you must see that the things that I'm sharing with you are working. I never planned this. I just went back testing it, and just found out. I just found a beautiful entry. This is a money pattern. It has hit this. It came back here, broke, and came and retested this area, giving this area what? An entry, a beautiful entry of a buy. This is a second entry of a buy that I would have taken. A second entry of a buy that I would have taken. My first entry will be here. My first entry is here on the retest. Then my take profit will be on the previous high. My take profit will be on the previous high. Yes, my take profit will be on the previous high. Here where the market has given us a 2-second touches. So looking at that, the market must give me a third touch again. So that's my first entry. The market came and retested, and I take another entry now. I'm taking another entry. I'm taking another entry here of a buy again with the same target, but I'm going to eat differently with the same target, different stop loss. Oh yeah, same target but same stop loss. I mean, TP entry number 1 TP hit, entry number 2 take profit hit again. The market just came again back. It's your choice if you just put in your stop loss, you just securing the bag. Then the market just came, the market retested again here. I see a retest, I think. I see a retest here. If I'm not mistaken, let me just see. But I see a retest, I think. Guys, the strategy is powerful. Okay, here is another consolidation, but it was tricky if you are not experiencing the strategy. Then the breakout, then another buy. You just go with it. Up. Imagine the pips you should have, the pips you secured from this trade. So guys, this is all from me, Paul Shilajwe, your mentor, the founder and CEO of Eagle FX. Guys, thank you for watching this video. I really appreciate it, and I hope it helps you. I hope it helps you a lot. I hope it helps you guys. Thank you for watching this video. Share with your friends. This is the NASDAQ strategy, guys. Surely you can see it. It is the NASDAQ strategy. Thanks, guys. Bye. Thanks, guys.